This conference will now be
All right, good day,
recorded.
everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the week of April 13th. Just a quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form. Trading does, in fact, involve risk. And I'm going to do a normal schedule this week for sure. And the following week, I'm on the road again. So this is me at the Money Show. I've been traveling a lot. I've been out doing more shows than usual. I expect that to calm down. But hey, I'm making a name for myself. What can I say? But I will squeeze in what I can squeeze in while I'm on the road next week. This week for sure will be a normal schedule. Thank you for bearing with me, putting up with me. But it helps to validate that you're working with somebody who knows a thing or two. So they've been wanting me to book me on these shows, and so that's the fact, Jack. All right. So seasonality. Um, we, it's going to be again a sort of a mixed bag. At this point in the month, here we are about halfway into April. I don't know. We might see a bump. We might see a crash. We might see both. At some point, and not. We should be entering a season of bearish seasonality. But because we got off to such a lousy start in the first quarter, who knows? Maybe it won't be quite so bad. It's just for the year, not expecting much, expecting a very flat year overall. How we get there, I don't know, but we're down on the year already. So I don't know if that's going to help to mute what's coming next. These are just averages, folks. Anything can happen, and as you know, because we're at war and because of different things going on, it is a kind of a different dynamic that we're dealing with. Price of oil and all that good stuff. So last week we did get a big bounce. We went back above the 50 SMA for now. We have not closed our bow tie. So if I were to show you the bow tie, you would see that I'm looking for signs of the bow tie crossing again. The one that's closest, that has the most bullish momentum, is the Russell. You can see the Russell is pretty close to going bull bow tie, and the because of this kind of recent relief rally, if you will, the SPY is getting there too. The SPY is getting there, the Q's getting there, but nobody's closer than the the Russell. Now, was this just a relief rally, or is it something that just took us right back into range, and we're just going to work our way higher from there? It's very difficult to know for sure. But we all we can do is just keep trading the market in front of us. This gap and hold here is in with relative strength in the Qs is giving us some reason to be not so bearish. If we were to go to the fear and greed index and just see what the current climate is here, this thing was down in the extreme fear range, and you can see that it's bumped up already, pretty close to neutral, pretty close to neutral. And so we've gone up a lot. Where were we? Just we were a year ago. No, it's a week ago, just a week ago, we were down here in the extreme fear range around 23. Now we're bumped up to 38. However, as you know, it's a news driven deal. And so the Iran negotiations failed and the strait is closed. And Trump's going to be doing mine sweeping operations. U.S. military will basically control the strait. No more people paying Iran to get through. Iran's desperate for money. They've been asking for money. Trump doesn't want to give it to them and doesn't want them collecting it from the ships going through. So that's going to be closed for now. And who knows? Maybe that will lead. Anything can happen. Maybe even since the last time I checked the news, maybe they say, you know what, Iran capitulated. They're going to do a deal after all. Who knows what's going to happen. But as of now, markets are overly news driven and unpredictable. Any deal done with the Iranians will also be unpredictable, subject to change, I'm sure, in conditions at any moment. The consumer data that came out last week was a little bit soft. The CPI that came out was a little bit warm, not hot. I'd say a little bit warm, but certainly nowhere near the annualized goals of the Fed of 2%. Okay, so yeah, certainly the higher oil prices seem to be having an effect on the consumer, and so probably making it hard for the average person to go out doing that consuming. However, the markets were fine. Is it just a relief rally, or is this some more, institutional long-term buying? Don't know yet. But I'm looking at it with side eye, especially till I see how this is resolved. So we've kept our portfolio pretty tight. Gold came back for us. Oil did drop last week quite a bit. Bitcoin recovered just a little bit. I've been wanting to get long Bitcoin, not there yet. So energy was the only sector that was down. All the others were up. And so which ones were up the least? Well, healthcare was up the least. So was consumer staples. So this defensive sector is not so great. But money was flowing hard into tech during this uptick last week. But it could be a completely different picture based on the news. And so we'll be seeing what those futures portend into tonight and into the pre-market tomorrow. So you can see the one-day performance hot were materials, technology, consumer cyclical, and cold were the defensive sectors with the exception of financials. For the week, industrials, tech, communications doing fairly well, energy weak for the week. And for the month, healthcare has been pretty lame, and energy, financials, materials been pretty good for the month. So lots of sector rotation, lots of shifting around, but most sectors were up last week for sure. And this is the weekly heat map showing you where the strength was. Still very good strength in semiconductors. I closed out a winning trade in Google here recently in one of my other accounts. Financials had a good week. Energy had a bad week. And software applications had a terrible week. Infotech had a terrible week. IBM down 7%. They just acquired Confluent, and they're trying to incorporate all that. That's always a challenge. And yeah, again, other software, Oracle, PLTR, CrowdStrike, all down, and Tesla struggling as well. But in this industrial space and in this kind of defense contractor space, home improvement not looking too bad. Consumer defensive just kind of blah, okay, and healthcare kind of soft. So that's where the overall look is and feel for where it is, and it could all change. Tech could get beaten up badly tomorrow, for all we know, and energy could rally. So it could all change tomorrow. And that's why we've kept our portfolio pretty tight, not putting on a ton of big new trades. So look ahead, the relief rally could hit a big snag. It could hit a big snag. It may be temporary. People may be accepting of it, or it could cause another full leg down, take us back down to recent lows, and broaden out those bow ties in the bearish sense. It also, oil prices remain at elevated levels. They've come in a little bit, but they haven't really come down big time from those elevated levels. They could get worse, probably will get worse before they get better if the strait is all blocked up. Volatility, of course, persists. Earnings season is coming soon. Just around the corner, it'll start to pick up this week. Not a lot of market movers. PPI could be of interest. You got the usual jobless claims, stuff like that. Could be a couple other things I missed here. Let me take one last look, because I was just looking at that when I started to get distracted by something. So let me look at here is this. Oh, I know what the distraction was. This calendar doesn't give us the following week yet. I hate it when it does that. I want to look ahead, and yet. So Forex Factory is not a bad place to go to if you want to go ahead and look ahead. And so let's see, where is this calendar? So if we look out the week ahead, now a lot of this is, not all of this is US. If I were to, yeah, so you got to sort of sift through the stuff that really matters to us. So there's really nothing on Monday. A couple of people speaking, flapping their gums from the Fed, nothing much. ADP weekly employment change on the 14th. Okay, that's kind of a big deal. And core PPI. Okay, so an employment number and PPI on Tuesday. Both of those could be market movers. Wednesday, again, looking for USD. Yeah, the manufacturing index got that one. Um, More speakers, the usual oil inventories number coming out. But I don't think that'll be overshadowed by the news by any means. And then on USD, Philly Fed manufacturing, a little bit more manufacturing information coming out on Thursday, and then you're going to get the usual jobless claims somewhere in here. I don't see the jobless claims. Did they cancel the jobless claims? Because I didn't see it. Oh, there it is. Unemployment claims. Nope, they didn't cancel it. They're those are coming out on Thursday like they always do, and then really nothing on Friday. So yeah, that's we're not really missing anything at all there. So yeah, so jobless claims on Thursday, manufacturing, a couple of manufacturing numbers and some PPI numbers. Not a ton of news, but the things that are coming out could be somewhat impactful. So the strong sectors continue to be tech is remaining strong, and utilities and real estate and materials are all strong sectors right now. The moderate sectors are industrials, communications, consumer discretionary, financials, and energy. And then the weak sectors are continue to be consumer staples and the healthcare sentiment. And so here are the expected earnings for this week. Um, just a couple of interesting ones. Fastenal on Monday. Citibank kicks off the banks. The banks will be kicked off here by Citibank, Wells Fargo, Johnson and Johnson in there too, J.P. Morgan. So yeah, three big banks. That's how it usually kicks off. The banks kick things off. So three big banks on Tuesday: J.P. Morgan, well, four: BlackRock, Citibank, and Wells Fargo. Those are three biggies. Morgan Stanley the next day. A couple other insurance things, a couple of miscellaneous things. Pepsi, Netflix on Thursday. There's a biggie. So there's a couple of biggies coming this week, and so we're going to get into full force here very fast into the earnings. Okay, that's it for that. Now let's go to our portfolio, such as it is. There's not much in there, and we're still up on the year. That's more than the S&P 500 can say. And this gold trade is winding down. I think it's pretty much done. I'm just leaving it on. What's left of it is sort of a lotto ticket. So 480, 510. If this can get up above 480, if GLD can get above 480, it might be worth something still. Yeah, it's trying. It's trying. So, but it's going to take a lot. So I think that trade's pretty much done. It's a lotto ticket at this point. And GME was a boing boing, a put boing boing that could be assisted tomorrow in a bigly sort of way. So GME, GameStop, and so yeah, need this. So this was a bear boing. Did it boing? I missed it. Darn it! I probably forgot to take. I probably forgot to set my alert. So I need to set my alert. I probably missed a sell signal. I hate it when I do that. And then the next day you could have sold two at the low. And then it got even lower on Friday before it rallied. Darn it, there was a missed sell signal right there. Classic bear boing boing. And so now either of these closed on a low. So I would forgive myself for holding into Friday. But yeah, I think Friday was a travel day for me. That's probably why I missed it. All right. Well, hopefully you didn't. And you should be closing that out. And I'm going to probably put a trail stop on mine. It's probably what I should have done in the first place is put a little trail stop on this guy. Whenever you can't watch a trade, just trail stop it. And that's what I should have done. So I'm going to go ahead and do a trail stop, about 10 cents. That's fine. Make that good till canceled. And it still looks bearish. I think we're still in good shape, but that one should have been taken for a profit. Hopefully you did. Okay. All right. PFE, a long call on PFE. This is a bull boing boing. V. Yeah, hasn't really. I don't think it boinged here, but it might have. Let's see. Probably no, I don't think so. I don't think it boinged yet. So this one hasn't boinged, and we'll see if that can recover. But just there's no action on that one right now. Now, here's an interesting one. We're long a put and long a call on QQQ, and we've been selling shorts against it. So the trade is more profitable than it seems because we've had some shorts against it that have expired, and we have left it kind of untethered, right, unabated by any shorts. And so I'm going to start selling shorts again against this. Wish I had sold one on Friday, but can't have everything. But after this big run up, we've come into some overhead resistance. That would have been a perfect time to sell some shorts on Friday. But what I'm going to do is I'm going to probably we're back above the 50 SMA. We're likely to see a pullback tomorrow if the news remains bad. Maybe even come back, fill this gap, test the 20 SMA somewhere around there. And once we're back in the range, I'm going to look to sell puts and calls. So I'm going to sell early and often. They'll be jacked up. We'll make really good profit on that. And we get to keep doing that all the way until May. So this is going to, at the end of the day, I'm confident this is going to be very profitable. So we just keep selling short, selling short, selling short. We can do it every day if we want, but definitely wait, let it shake out tomorrow, and then after the open, we're gonna sell a couple of shorts tomorrow. But I don't know. I don't want to do it right now because I don't have any idea where it's going to open. I also have some trade ideas that I want to share with you, but I'm not going to put them on yet. Okay. I've been looking internationally, okay, just to try to reduce some of our exposure to the US market a little bit. And so here's a couple ideas. Now, I'm just giving you ideas. I'm not going to put these on yet. This is LIT. This is the Lithium and Battery Technology ETF. That's breaking the new highs. ILF is Latin America shares. That's breaking new highs. That makes sense because of all the good things, positive things happening in Latin America with new governments, that sort of thing. And the Vanguard, if you want something more generic international, the Vanguard VXUS is an international stock ETF. That doesn't look too bad. It's just holding up all right. That looks like a good cash flow idea. And here's something called a momentum, MTUM, MTUM, a momentum ETF, and that's got a lot of momentum, doesn't it? So that's lighting the world afire. So I'm not sure how much I want to chase those or whether those would be good. I think I'll check the volatility, maybe do bull put spreads or some kind of a risk reversal trade or something like that on these. But again, not wanting to do anything yet. If you're looking for something bearish, Nike looking terrible, I would probably do some kind of it may be trying to find a bottom here just in case it does. I wouldn't just buy a put on here. It's a little late for that. But I would probably do some kind of a flexible put calendar spread that's flexible enough to flip to a bull put spread if this thing becomes bullish. Okay, so the whole key right now is to remain as flexible as possible going into this week. And I will have an earlier than usual trading lab so that we can jump in once we see the results of the weekend news. Okay, we don't want to put on anything just yet until then. So look for me Monday or Tuesday to do a trading lab, and then we'll go ahead and sell new shorts on the Qs and put on some new trades. Then, for now, we're doing the right thing by more or less sitting in our hands as much as possible because it's been profitable to do that. We are up on the year, and not a lot of people can say that. On behalf of Wealth Foundations Northwest, it has been my pleasure to have been your coach today. Good luck in trading, everybody. Take care. Bye bye.